Hey Joe, how's everything going?
Good, good. Thanks so much for having me on your show. I'm really excited to talk to you today.
Awesome. Really appreciate your time here. I have a couple of things that I want to dive into with you. There are a couple of posts that you made about Bitcoin's strength, Bitcoin's volatility. Let me
hmm
just show you the post, and then you can just formulate your thoughts while I show the post. So the first one is this one here. It shows you the BDXY index. This is the dollar.
BBDXY, yeah.
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 So this one shows you basically I guess the value of a basket of currencies versus Bitcoin. Is that
Correct.
is
Correct, yeah.
Yeah, okay.
hmm
So the second one that I want to show is this one right here. So the M2 money supply, the amount of money in the world, basically, versus Bitcoin's price. M2 money
hmm
supply seems to be coming down. And then the third one that I want to talk about is volatility. So the amount of, I guess, up and down movements in Bitcoin's price, just how things have changed over time, how Bitcoin has matured. I guess you can get right into it. Whatever you feel comfortable talking about first. Maybe if you want to talk about volatility first, whatever you want to talk about. Go ahead.
hmm Yeah, so I'd actually like to, I'll correct myself first. The BBDXY is actually, are you familiar with the Dixie, the dollar index?
Yeah,
Okay,
yeah.
so it's basically the
Can you
same thing
explain it for
as,
my audience, anyways?
of course, yeah. So basically, the DXY is a measure of the dollar, the US dollar's strength relative to a basket of other currencies, right? So the euro, the British pound, Japanese yen, Chinese yuan, etc. Basically, what it's used for is in order to gauge the strength of the US dollar relative to other foreign exchange. Now, this is useful in technical analysis. It's useful in taking a look at where we are in the cycle, right? We know that the Federal Reserve is engaged in cutting interest rates. But where is the Fed relative to other central banks? By looking at the US dollar's Dixie index, or in this case, BBDXY, which is similar to Dixie. I prefer it. It's a metric created by Bloomberg, very similar to DXY, but the weightings are a little bit better, in my opinion. We can see where the Fed is at relative to other central banks by taking a look at dollar strength and what's going on here. So we know that the Fed has been cutting rates for quite some time now, right? They've been cutting rates for the better part of 2024. We've now brought the terminal rate, which was 5.5%, and the current policy interest rate on Fed funds is 4.5%. So we've cut a total of 100 basis points, or one full percentage point. Now, you would think as a result of that, the US dollar is going to weaken, right? Obviously, if rates are high, the US dollar is stronger, rates come down, the US dollar weakens. But the reality is, we've been in the longest bout of US dollar strength in quite some time. It's lasted since, if I'm looking at my live chart, since September to today. And we're recording this on January 3rd, and I imagine this will be posted pretty soon. So we've had a little bit over 3 months period of dollar strength. The reason the dollar is running up so much is because while the Fed is cutting, other central banks are cutting faster than we are, right? And
Mhm.
so those currencies are weakening relative to the US dollar. Um, Now, as a result of that, that's coming right up against Bitcoin, right? Generally speaking, Bitcoin and the Bloomberg Dollar Index and any dollar index are inversely related. If you look back at that chart for just a moment, you can notice that during 2021 and 2022, which is it's most observable here, the dollar index is in white, Bitcoin is in orange. You'll see that both of them are inversely correlated. When the dollar was running up in strength, Bitcoin had corrected from like the almost $70,000 range all the way down to $15,000, right? This little period that I highlighted here, this minus 25% that I marked on the chart, excuse me, was just, I made a white line from the left of the chart all the way to the right of the chart. Right now, the dollar is about, BBDXY is at about 13, 14 points. And then you go back in time. The last time we were this strong, Bitcoin had corrected down by 25%. Currently, Bitcoin has only corrected peak to trough about 15%. And right now, Bitcoin is only corrected peak to where we are now, from the all-time high to where we are now, about 10%, right? And so basically what this tweet is getting at is that the last time the US dollar had strengthened to this level, 13, 14 points, Bitcoin had dropped 25%. Now, of course, this was during a bear market for Bitcoin. And this was during a period of about a year, actually a year and a half or 2 years worth of this rally in US dollars. Obviously, this was during the period where the Fed was hiking interest rates, and it was hiking with a lot of verve. Basically, Powell had been coming off of the second time where he had to cut interest rates to the zero lower bound in order to save global financial markets. And he wasn't too happy about that. He has something to prove. And basically, that's what this last rate hiking and subsequently cutting cycle has been all about. Powell wants to regain his credibility. He wants people to know that he's not just some guy that gets scared during times of crises and flips the money printer on. He wants to let people know he's serious. That's what this entire last rate hiking cycle has been about. And so that's what Bitcoin was up against last time. This time around, it's a little bit different. Bitcoin is rising. The dollar is strengthening, but it's important to remember the rate hiking / cutting regime that we're in. The aggregate level of global policy rates are coming down. And so the cost of capital on a global basis is falling. And so even though we are seeing this outright dollar strength, it's not because global central banks are raising rates and the Fed is raising rates faster and to a higher terminal rate than other central banks. It's simply the fact that the Fed is cutting, but other central banks are cutting faster. Why are they doing that? It's because the US is in a very unique position where our economy is more robust than other economies. Even just today, I'm looking at my Bloomberg terminal this morning, 10 a.m. ISM Manufacturing, a survey that went out to all manufacturing purchasing managers at manufacturing companies. It came in higher than expected. The prior survey level was a little bit below 50, 48.4. This one came in at 49.3. It was expected to fall to 48.2. And so manufacturing, even though it represents very little of US GDP now, I believe it represents under 20% of US GDP. Services are much more important to, US economic health. It's very telling that we're getting these reports that are beating more often than they are missing. And this has basically been the case for the last several months. Economic data has been coming in better than expected. And so as a result, what has Powell done? He's gone up to his pulpit and walked back his rate cutting talk. Previously, expectations were that, if I'll go over to my little thing here so I can see, previously expectations were that the Fed was going to lower interest rates to 3.5% or lower, so another 100 basis points of cuts. And currently, it's only estimated that the Fed is going to bring rates down by the end of this year to about 4%. And so 50 basis points of cuts were taken off the table because of the strength of the US economy. What does that do to this M2 chart here, right? What do higher rate expectations and a slower cadence of rate cutting do to this dollar index chart, rather, is what I mean. It goes up. And so that's basically what we're experiencing now. So it's two different regimes. Last time around, Bitcoin was in a bear market while the Federal Reserve was engaged in all this rate hiking. And now it's the other way around. The US economy is uniquely robust. And the only reason that the dollar index is strengthening is because while we're cutting rates, these other central banks are cutting rates at a faster cadence. And I'll pause for questions here if you've got any, but this leads directly into the M2 chart, which I know a lot of your viewers have already heard about, and I'm happy to discuss as well.
No, I think you did a great job there. Why would the ISM matter here?
So all of these different things factor into the Fed's decision making, right? Primarily, it is PCE is the main thing the Fed's watching out for. Remember, their dual mandate is stable prices and full employment. Usually, it's a trade-off between those two things. But now we're in the phase where, okay, the inflation battle is mostly won. Now we're focusing on full employment, i.e. looking at broad economic indicators and seeing whether or not they are holding up. So that's why ISM matters here. It factors into the Fed's decision-making about how much they're going to cut, when they're going to cut, what their ultimate level of rates they will end at will be.
Mm-hmm. Okay, yeah, that makes sense. Okay, so let's go to the second picture here. Do you think that that's going to lead to an increase in this number in the M2 money supply? The fact that the ISM is lagging, the fact that we want more growth, do you think that this is going to lead to the M2 money supply shooting up?
So actually, this is the reason that the global M2 money supply has fallen. And I'll explain this I'll explain this here. Basically, this global M2 chart is denominated in US dollars. And of course, when you denominate currencies who are underperforming the United States dollar, and you take their global M2, you denominate it in USD, it's going to be shrinking. Even if it remains absolutely stable, if the dollar is strengthening against those currencies, you take that global M2 money stock from like Algeria or something, for example. Algeria isn't in this measure, but let's just take Algeria, for example, doing really poorly against the dollar. You convert their global M2 into USD. It's going to be falling, even though Algeria's money stock might be totally stable. And so that's the dynamic that's going on here. Global M2 money stock, in all honesty, is not falling as much as it's showing right here. In fact, it's stable, if not rising. But what's happening is this hugely severe bout of US dollar strength as a result of how robust our economy is. And that's led to this decrease in global M2. Now, this specific relationship here goes back a very long time, and this actually plays into my volatility chart. So you picked the 3 perfect charts to talk about today. So right now, Bitcoin's volatility is the lowest it has been cyclically, right? If we're talking about the average volatility during cycles, this is the lowest average volatility Bitcoin has ever had. At no point, it says here in this tweet, at no point during this cycle has Bitcoin's volatility exceeded the average volatility of last cycle. So that's pretty wild. There has been 0 instances of like extreme volatility, right? Bitcoin, one hallmark of Bitcoin, and people always use this as an argument against why they don't invest in Bitcoin, an argument against Bitcoin, is that Bitcoin is too volatile. Well, the fact that during this cycle, this is the 30-day rolling volatility, that at no point has there been this crazy sell-off or crazy, 15K candle day, either up or down, that has caused volatility to spike. That's quite remarkable, right? If you take a look at last cycle, you can just eyeball this chart and say that the mean volatility of last cycle was 60 or more, right? It spent the majority of the time hovering, revolving around that 60 level, oscillating up and down around that 60 level. Now, the mean volatility for this cycle is right around that 40 level, right? And so as Bitcoin grows as an asset, right, as it goes from this $1 trillion asset, which it was around the $50,000 level, to this $2 trillion asset, which it is currently, it's about 1.87 or something like that. Its volatility is declining, and that makes sense. As the asset grows larger, you're going to see less of these massive sell-offs because that necessitates, more capital selling off, right? So if you have a $2 trillion asset, in order to get the exact same percentage drawdown in price that you would see when Bitcoin was a $10 trillion asset, you need double the amount of capital selling Bitcoin, and that's just not going to happen. It also speaks to the new cohorts that are accumulating Bitcoin now, right? It's now no longer just primarily retail and then some select institutions that are accumulating it, through Coinbase or via GBTC or whatever. You now have these major financial institutions who are not only offering these ETFs, but also have a portion of their own funds within these spot ETFs themselves. You now have more companies than ever able to invest in Bitcoin via these spot ETFs. And you have more companies than ever before also pursuing a Bitcoin treasury strategy, public and private. Of course, we know the big public names. We know Metaplanet, my buddy Dylan LeClaire, shout out, was the best performing stock in the world last year in 2024 as a result of their treasury strategy. You have Semler Scientific. You have, of course, the granddaddy of them all, MicroStrategy, and a whole host of other names. But also a huge amount of private companies, right? Hardware stores, right, in your town. They are accumulating a position into Bitcoin. And so now that the reality of a corporate treasury is, generally speaking, you don't rotate out of what you've rotated into. Most corporate treasury plays are long-term plays, right? You're buying this thing and you're holding it. That helps Bitcoin's volatility. The fact that Bitcoin has now entered into the spot ETF market, people are passively allocating a certain amount of their paycheck every 2 weeks into whatever they'd like to, into whatever available in their 401k. Now we're getting passive flows, right, directly into Bitcoin. And then the other cherry on top is MicroStrategy, which of course has been added to the NASDAQ 100. QQQ is the 3rd largest passive ETF in the world. And so now Bitcoin indirectly is the beneficiary of those billions of dollars, hundreds of billions of dollars of yearly passive flows. And so now the hallmark of this Bitcoin cycle has been stability through brand new cohorts who are now allocating to the asset. In prior cycles, it was largely retail, and there was a great amount of leverage in the market. Obviously, perpetual futures are still a huge part of Bitcoin's market, its day-to-day price action, its liquidity, but less so than in prior cycles. Now, Bitcoin's price action, the price you see every single day, what's influencing the block clock's number to move behind me, the BTC USD exchange rate, it's not primarily leverage driven. It's now primarily huge and stable and steady spot inflows and holding that spot Bitcoin from these entirely new cohorts, right? We're talking about institutions, businesses, big and small, and passive flows both directly into the ETFs and to Bitcoin adjacent firms who allocate to it, like MicroStrategy, which has now been included in the NASDAQ 100. And you can bet your bottom dollar that it won't be the last one. And so Bitcoin's volatility is shrinking. It makes sense because it's a larger asset, but it also makes sense because of these new people who are buying it, these new entities that are buying it, like I just mentioned. And this plays into the global M2 chart. So you'll see here this chart that you just put up on screen. This is fantastic. You can see that Bitcoin's performance now in its fourth post-halving cycle run is mirroring the performance that it had during its second era, which is pretty substantial, right? Considering that during that time, Bitcoin wasn't even a $500 billion asset, right? Let alone the $2 trillion asset that it is today. And so it's very impressive that it's moving, in MMA terms, it's a heavyweight it's moving like a flyweight. It's very impressive, right? This huge Goliath behemoth of an asset is almost, it's like a stone's throw away from being one of its best cycles ever, despite its size. And so that plays into the global M2 chart that I showed that you also have up on screen. Basically, like, there's been this loose correlation between Bitcoin and the global M2 money stock, right? Over time. It's been very loose. I have another chart. If you zoom out, it's basically just directionally correlating to it. It's not like 1-to-1. It's not super duper close. But now that these new cohorts have arrived, for whatever reason, since September of last year, these two things have moved almost neck and neck, not just directionally, but when you apply this 10-week lag, this approximately 70-day lag, or exactly 70-day lag, rather, approximately 10 weeks, or exactly 10 weeks, then you get this great correlation that you see up on screen. Now, there are a couple of reasons behind why this is probably happening. I think chief among them are these new cohorts that are investing in Bitcoin, these people that have far less of a tendency to sell what they're holding. And ultimately, I mean, I've been writing about this for 2.5 years now, a little bit more than 2.5 years. My colleague and I, Nick, over at the Bitcoin Layer, which many of you may watch over on YouTube, him and I have spoken for the longest time about how currently Bitcoin trades like the NASDAQ, trades like a NASDAQ adjacent tech stock, right? It's very much risk on. And so, when there's any kind of flight to safety, people sell things that are risky. So for example, during 2021, 2022, when there was a big panic, and even during 2023, early 2023, when there was that banking shock, people sell their Bitcoin. They don't want to own it. But ultimately, because global money printing is an inevitability, it's the direction we have to go. And I'm happy to talk about that as well. With our current fiscal deficit as a percentage of GDP, this is one of my favorite charts to explain why there's only one way that all of this resolves. Nick and I have posited that over time, Bitcoin will inevitably trade in the way that its properties as an asset allow it to trade, which is an absolutely scarce money, an absolutely scarce asset. It's something that people allocate to in times of good and bad, right? And so it inevitably will become a flight to safety trade. And as Bitcoin has matured as an asset throughout the cycle, in September of last year, or September of 2023, I believe that, obviously, as every day passes, we're closer than ever to Bitcoin trading how it should, which is this proxy for the global money supply. And you can see that in September of 2023. I believe that now that these new cohorts have entered the game, that's why Bitcoin is trading much more aligned with the global M2 money stock. Now,
can I mention something there?
Mm-hmm, of course.
I have a couple points that I want to make. So the first thing that I want to say is that the new cohorts that you're mentioning,
mm-hmm.
they're now a lot more responsible. So they're not taking on excess leverage in order to.
That's exactly right.
To buy Bitcoin, so they don't have to sell. So the new people that are buying it are BlackRock. They're not gonna, like, if something happens, if Bitcoin's price drops 80% from here, BlackRock is not going to sell the majority of their holdings. They're not going to be forced to sell because the holdings that they have are backed by cash. Of course, their customers may have to sell because maybe their customers use those Bitcoin ETFs to take on loans. Maybe they borrowed against those Bitcoin ETFs, but the majority of BlackRock's holdings are probably not borrowed against. Like, somebody probably hasn't used them as margin, as margin, so they haven't borrowed against it, so they won't sell. But in the I guess in the past cycles, it was a lot of I guess shitcoin companies that were basically borrowing against their Bitcoin. Right? Would you say that that's true?
It is true. I actually have a chart that I could share my screen and show. Would I be able to share my screen?
Yeah, of course.
Excellent. Yeah. So basically what I have here is a chart of the funding rate in the perpetual futures market for Bitcoin. Basically, this is the average rate that's paid out from shorts to longs or longs to shorts every 8 hours. And the higher this funding rate is, the more leverage you can observe is present in the market. I just want you to notice, the viewers to notice one thing, and this plays into exactly what you were just saying. There's way less leverage in the system, there's way less froth. I've been writing about this over at my own publication, but also over at the Bitcoin Layer. I've been writing about this in our biweekly newsletter, Mean Median Mode, that goes out every Monday. I've been writing about, take a look at the funding rate back here in 2021. This is 0.1% paid out every single 8 hours from longs to shorts in order to play ball in Bitcoin. That's insane. The mean level is right around like
wait.
0.008.
Can you explain that?
Yeah.
Can you explain that?
Yeah, so basically the funding rate is the rate that's paid out from longs to shorts or shorts to longs in order to hold this perpetual futures contract. So unlike a normal futures contract, which has a date of expiry, a perpetual futures contract rolls over every 8 hours. And so it's a leveraged play on Bitcoin. Longs can bet that Bitcoin's price is going to go up over the next 8 hours, and vice versa. Shorts can bet that Bitcoin's price is going to fall over the next 8 hours. And based on how long dominant or short dominant the market is, then either longs have to pay out this rate to shorts to hold a contract every 8 hours, and vice versa. Shorts have to pay longs out a certain rate every 8 hours. And this is basically an indication of how leveraged long dominant or leveraged short dominant the market is. So you'll notice during the prior bull run in 2021, we went from 10,000 to 64,000 and then back up to 67,000. You'll note that during that first leg, there was an insane amount of leverage. The mean funding rate, right? So the mean rate, Bitcoin is obviously mostly always long dominant in the futures market. People are on net over a long enough time frame betting that Bitcoin's price is going to go up. And so the average rate that gets paid out in this market is like 0.005, right? I have my cursor hovering over it here. You'll notice that during these periods, and these are weekly candles, so the average rate during this period that got paid out from leverage longs to leverage shorts was 100 times that at its peak, right? Not just 10 times that, but 100 times that during its peak. And so that's really substantial. That's extremely substantial. And it's a testament to how much leverage was present in the market last time. Then, of course, we had FTX explode right around October of 2022, November of 2022, which happened right here, right around close to when Bitcoin bottomed. And of course, leverage was totally wiped out. It wasn't present. And now, in this period where Bitcoin is knocking on the door of $100,000, we're right around 0.007. So we're only a little bit elevated in terms of historical leverage in Bitcoin's market. So it's exactly what you just mentioned. This is obviously one component of the Bitcoin market that is leveraged. But the reality here is that it's not just me saying it. It's what the data is suggesting. This market is much less driven by frothy leverage and much more so driven by spot buying. If there was a huge spike in this, if these rates were much more elevated, we would, conclude that Bitcoin is very much driven by leverage, but that's just simply not what we are seeing today. And sorry for cutting off there, but that's kind of the perfect chart to illustrate what you were mentioning.
No, that was perfect. So just so I can articulate this so that you know that I understand it. But basically, what you're saying is that in the past, the growth was funded by leverage, by people borrowing money to buy Bitcoin. Now, or using leverage. So let's say was it futures contracts?
Correct.
Yeah, so they were using futures contracts. They were trying to get exposure to Bitcoin through futures contracts before. Now they're getting exposure to Bitcoin just by spot buying.
Correct. Yeah, increasingly through spot buying. Obviously, there are always going to be people who enter the casino. But this cycle, there have been during this particular bull market, there are fewer people in the leverage casino than there ever have been before. The market is increasingly mostly dominated by spot, more so than it has been prior cycles.
Okay, that makes sense. And I wanted to just go back to this chart here. I think you made a great point there. I think you mentioned the leverage. That was really important. The next thing that I wanted to talk about here is, so I made a video about this chart. The video that I made was basically saying how the M2 money supply doesn't really, in the long term, it doesn't really matter because Bitcoin, at least this is my thesis. This is what I think. I think that Bitcoin is going to absorb value from other assets. So the amount of money in the system doesn't have to increase. in order for people to, let's say, sell their stocks and buy Bitcoin, right? Or to have even their passive funds from their jobs that, let's say, before they were putting $100 towards the S&P 500, and now they're putting $80 towards the S&P 500 and $20 towards Bitcoin. So I was thinking that this, the white line here, the white, the US dollar, basically the M2 money supply, the global M2 money supply, it doesn't have to increase in order for Bitcoin's price to reach 200,000, 500,000, a million. Would you agree?
I would agree. And I would also say that global M2 is going to increase, right? So I totally agree with you. And it's really hard, it's hard to put that much nuance into a 280 character tweet. If I did like a long form essay on this, I'd be able to include all of my different, all the different aspects of this, be able to be much more nuanced. But within 280 characters, I really just try to get the point home. And so I get a lot of comments saying that, what's my favorite one? Something like, this is manipulated or whatever, or the global M2 doesn't matter, do this, do that, whatever. Here's what I think. So you're exactly right. Bitcoin is going to absorb monetary premium from other assets, where it just shouldn't be. For example, rental properties, right? Like we're still in the Airbnb bust, where this whole idea of passive income from owning rental properties is largely falling on its face because people realize, wait a minute, this is a job. This is a full-time job. I have to manage these properties. I don't like doing that. And so people you hear stories on a daily basis, weekly basis, of people selling their rental properties and buying Bitcoin. I know several examples personally of people selling their second, third, fourth, or all of their rental properties in order to just buy Bitcoin and hold it. So we're absorbing that excess monetary premium from real estate, and it's going into Bitcoin. That's going to continue happening. People are going to rotate out of things like the S&P 500, like the NASDAQ, like single stocks like NVIDIA, Meta, etc. And they're going to buy plays like Bitcoin. So we do get that capital rotation, which is fantastic. And that's where the lion's share of Bitcoin's price appreciation over the next 5, 10, 50 years is going to come from. But then for me, it also comes back to what's the ultimate value proposition of Bitcoin? And for me, it's the apex hedge against perpetual monetary debasement, right? It's the best way around in order to insulate yourself and preserve your wealth amidst an environment where the money printer just can't stop printing, right? And so given that that's Bitcoin's value proposition, this global M2 correlation to me is very, very striking. Because for me, it's a fulfillment of what Bitcoin is ultimately meant to do. And it's meant to serve as this apex hedge against monetary debasement. It's a savings vehicle. I believe over time that once Bitcoin absorbs the monetary premium, the excess monetary premium that shouldn't be in assets like real estate, like the fixed income market, and Bitcoin's a $300, $450 trillion asset, it denominates, 20% or 30 or 40% or even 50% of all global wealth. At that point, I believe, Bitcoin will begin to become peer-to-peer electronic cash, like it says behind me on that sign. But right now, we're living through the store of value monetization phase of Bitcoin, where it's going from literally nothing to a $2 trillion asset, then a $28 trillion asset, absorbing all of gold's monetary premium, or reaching gold parity and surpassing it. And along the way, also absorbing some of that monetary premium. So gold's market cap may fall by the time Bitcoin reaches parity with it. And then the global, the US Treasury market, which is slightly larger than gold, closer to $30 trillion now. And then the global fixed income market, so on and so forth. So this is, I love this website so much. This is total assets by market cap. You can see Bitcoin's $1.94 trillion right now. The next step on the chopping block is Amazon. We've already passed the largest energy company in the world, which is Saudi Aramco. We've already surpassed silver at 1.693 trillion. Huge companies that you've obviously heard of: Meta, Tesla, Broadcom, TSMC, right? Berkshire Hathaway, Walmart. These massive, the S&P 500, the world's largest S&P 500 ETF, SPDR. So, or SPY rather. So now we're at the point where Bitcoin is number 7 in the world, right? According to this chart, number 7. Only a couple more slots before it's the world's largest asset. And then it becomes a question of what then? Well, I believe that it's going to be twofold, right? Bitcoin will continue fulfilling its promise of being the world's best hedge against global, perpetual monetary debasement. That's why I think this M2 chart is so striking, and why I think that the hate that it's gotten for being myopic or single-minded or not thinking about X, Y, or Z is really silly, because of course there are going to be factors along the way that cause Bitcoin to detach from global M2. There are going to be periods of underperformance and overperformance. There are Bitcoin native factors that cause it to have these periods of outperformance. For example, during 2023, when there was this massive detachment between global M2 and Bitcoin, Bitcoin was not performing as well. It was not following global M2 as closely as a result of its own native factors, its own native underperformance. And in the same way, Bitcoin will not follow global M2 to a T. There are going to be periods of outperformance, such as what we're seeing now, right? When Trump got elected, right? When Trump was elected, Bitcoin shot from $67K to $108,000, right? That is an example of a Bitcoin native factor that drives it to completely detach from the majority of the things it's correlated to, right? Equities didn't perform as well when Trump was elected. They performed well. Basically, the whole market was in the Trump trade for all of November. The Bitcoin performed better. That's because Trump was, avowedly pro-Bitcoin. In the same way, I think Bitcoin's going to probably chop around for the next couple of weeks, the next 18 days or 17 days until January 20th, once he's inaugurated. And then in the same way that Bitcoin was consolidating, it had those pre-election jitters, and then it had that post-election rally. I believe in the same way we're kind of at a similar spot, right? We have that pre-inauguration jitters. Nobody really wants to buy anything. It's after the holiday. It's after New Year's. And then post-inauguration, when serious talk about a strategic Bitcoin reserve comes around, you hear even more rumors of other countries pursuing the same thing. We had one out of Russia just a week and a half ago. Literally like Christmas Eve, best Christmas present ever. Rumor that Russia was pursuing a strategic Bitcoin reserve, not because it's great for Russia to own the world's Bitcoin, but it's going to drive the US, particularly a competitive guy like Trump, to want to buy that Bitcoin before Putin does, right? So Bitcoin has its own native reasons for why it does very well. It's not just a global M2 proxy. It's sensitive to global liquidity, not global M2, but global liquidity, which is a little bit different, to the tune of about currently like 25x. So for every move that global balance sheet capacity has in one direction, Bitcoin is about 25 times as sensitive to it. And that's going to continue. And that's why it is a hedge. If it was just moving one to one, sure, it's a hedge, but you want to be able to preserve your wealth, not just buy a global money supply proxy. What this is basically a levered global money supply proxy. Okay, Jerome Powell, you're going to print him, $10 billion. Bitcoin's going to rise by, $250 billion once you do that, right? Dummy. And so that's the whole point. That's why people buy Bitcoin. And so I believe it's going to continue fulfilling that purpose over the next 5 years, 10 years, 50 years. Which is, it's a good thing. It's a very good thing that it does that. But then along the way, that chart that you showed of money in art, money in equities, money in fixed income, money in real estate, that Bitcoin is also going to absorb the excess monetary premium within those vehicles as well. You see here, $115 trillion in equities, $16 trillion in gold. This is a little bit outdated. It's like $25 trillion now. $18 trillion in art, $6 trillion in collectibles, $115 trillion in equities, $330 trillion in real estate, $300 trillion in bonds, and then just money, base money, $120 trillion. So Bitcoin on its way to, taking up 1%, then 5% of the total global asset value, it's going to knock off it's going to absorb the monetary premium away from a lot of these different assets. Jesse Myers has it totally spot on here. Bitcoin's total addressable market is the world's balance sheet, because it's the world's superior denominator. If we think about what money is, it's supposed to be a communication mechanism, communicating the value of things. And when we have the primary reserve currency that we use globally, the US dollar, inflating, prices inflating by 2% a year if you trust CPI, the base money supply inflating by 5% a year or more, that's not a very reliable communication mechanism. It makes everyone's lives worse to the benefit of asset owners. Bitcoin democratizes that, because you can buy, if this block clock went to sats for 1 cent, you could buy 100 sats or more than 100 or like 980 sats or something like that for 1 cent. And so that's fantastic. It's democratizing asset ownership to even the most asset poor among us. And that's fantastic, because as the money supply continues inflating, it continues rising. It allows people to hedge themselves regardless of how much money they actually have, regardless of how many assets they own. It lets everybody be an asset owner. and therefore
Yeah.
everybody to benefit during this period of perpetual monetary debasement. So this chart is just the fulfillment of what Bitcoin promises to be, which is the world's best proxy for global monetary debasement.
Can I mention something here? So
Mhm.
I think Michael Saylor actually posted this chart as well. He had predicted 4 quadrillion in total global asset value,
Mhm.
and he said that Bitcoin would be 280 trillion, and that's in 20 years or so. I actually think that maybe I'm too bullish here. I actually think that Bitcoin's going to be much higher than that, because I think that I think a lot of this real estate value is coming from people who are completely speculating on real estate. They're
Mm.
they're buying real estate not because of the because they want to provide housing, but because they think that the price of housing is going to go up.
Mhm.
What are your thoughts on that?
It's true. It's just a bet for people, right? And if you look at obviously, U.S. real estate is in a bull market. I believe it's going to continue being in a bull market for the next decade. And it's actually why we're building another. So obviously, you see the FASB behind me. We're building another financial product that lets you have exposure to both assets. We could talk about that if you'd like, but people are not buying U.S. real estate because they really love the way the house looks. They're buying it because they want to make money. They're buying rental properties because they want to be landlords. If you ask, and it's actually really depressing. It's very sad. I remember I looked back at my yearbook from like fourth grade, and it said like, "What do you want to be when you grow up?" And I said like the president of Nintendo or something like that, or I want to be an astronaut, right? Something that like a little kid would dream of doing, like president of this big video game company, or like because kids love video games. I loved video games, or like an astronaut, right? These huge these dreams and ambitions. If you ask kids these days what their number one job that they would want to be, if you ask teenagers specifically, they say landlord. They want to be landlords.
Wow.
They want to be rent seekers, which is particularly embarrassing because this is the same cohort of people who are buying Bitcoin. The Fed is the ultimate rent seeker, right? What they are trying to, the US government is the ultimate rent seeker. You will never have any ownership over anything for all of time. Even if you own your house, even if you supply yourself with your own electricity, even if you have a well that you pump water from, you still have to pay property taxes. You are a permanent renter. The US government is the ultimate landlord. And so for these people who are so avowedly anti-US government, at least the way it currently exists, both on the left and on the right, for that same generation to be saying that they want to be landlords, it's very depressing. And it's a testament to the fact that it's not that my generation doesn't want to work. It's that they feel as even if they work, they won't be able to achieve what they've always wanted to achieve. They feel left behind. They feel destitute, as if their dreams will never come to fruition. So they want to be landlords, right? They want to be rent seekers. And that's very depressing because with Bitcoin, it does allow you to achieve what you want to achieve. You just need to save in a better savings vehicle, right? Saving in USD, even a high yield savings account, at best, you're breaking even, right? If we're talking about monetary debasement, you're looking at like 5% a year, if that, probably even more. If you're looking at the actual rate of growth of asset prices, if you actually take a look at, CPI, if we're honest about the weightings, everything people buy on a daily basis is probably going up more realistically by about 4 to 5% a year. So with current high yield savings accounts at like 4%, in order for the banks to make a spread between Fed funds and what they're offering their clients, and mortgage rates and what they're offering their clients, you're not beating inflation. So saving in US dollars, you're not beating inflation. Saving in the S&P 500, over the last 5 years, it has a like 12.5% compound annual growth rate, 13%. You're beating inflation, but certainly not to the degree that you could be with Bitcoin. With Bitcoin, over the last 5 years, it has something like a 60 to 70% compound annual growth rate, right? So totally blowing these other asset classes out of the water. My generation feeling lost and left behind. The solution to that isn't a function of I'm going to buy up as much real estate as I can, rent it out to people, and earn passive income from doing that. The solution to that is simply using a better savings vehicle for your income, right? It's very simple. If you choose Bitcoin as your savings vehicle, and rather than contributing to a 401k or a Roth, you instead contribute, a DCA amount every day or every week or whenever you get your paycheck or every month into Bitcoin, you'll be able to achieve those dreams, whatever they may be, of building that company you want to build, or traveling the world, or having 7 kids. I know that's my dream. My dream is to have 7 children, or as many as God wills. You can achieve that dream And you can do it without wanting to be a landlord, to be a rent seeker, to basically be a mini US government, a mini Federal Reserve, doing basically nothing, and then demanding, your money at the end of every month. There's a better way for people, and that way is by saving in Bitcoin. It's a better savings vehicle. So no, people, I don't think people are buying real estate because they like it. I think people are buying real estate because they believe the price is going to go up, and also you get a little bit of fixed income from that as well. But the reality is, if you're buying something because you believe the price is going to go up, really the only thing out there that you should be buying or you should be considering buying is Bitcoin, and maybe some Bitcoin adjacent stocks, such as mining companies and things like that. And this also plays into financial advisors who are continuously not recommending Bitcoin. 16 years in now, Bitcoin has hit its 16th birthday. Happy birthday, Bitcoin, as we're recording this, which is awesome. 15 and a half years or 15 years on from Bitcoin having a market price, these financial advisors that still ignore Bitcoin, they're leaving their clients behind. It's very embarrassing. These people swear, an oath they have a fiduciary duty to all of their clients. And they're continuously, year after year, not allocating them into the best performing asset of the last decade, and of the last 5 years, and of the last 2 years, and of the last 3 years, right? The best performing asset in 2024 was actually not Bitcoin. It was, I believe, MicroStrategy, and then NVIDIA, and then Bitcoin, something like that. I know Alex Thorne over on Twitter, Intangible Coins on X, he posted a chart. I believe that was the order. But regardless, Bitcoin exposure over a multi-year time frame is going to give you the best bang for your buck in terms of a savings vehicle. These financial advisors who are not recommending Bitcoin, I don't know why any of them still have jobs. In 5 years, if they hold on to their guns, none of them are going to have jobs.
Yeah, I think I think it's more about it's a selfish intention where basically they want to make their fees, because you really you don't make fees if you tell somebody to buy Bitcoin, put it into cold storage, hold their own private keys, hold their own seed phrase, all that stuff. I mean, at least that's my experience, because I used to work in banking. I used to work in financial services, different kinds of financial services. Most people will not recommend Bitcoin because they want to make their fees. I've actually spoken to financial advisors directly, not from the capacity of Bitcoin. Would you recommend Bitcoin? But just in general, they're more interested in their fees than giving their customers the best returns.
That's
right?
all it is. You can't
that's
collect 100 basis points on a client when you tell them to buy Bitcoin, and then all of a sudden that client starts to get some cognizance, and they say, wait a minute, your 16% returns that have barely beat the S&P 500 that you've been able to generate me over the last half decade, Bitcoin's blowing that out of the water, and I'm paying you 1% on my $1 million portfolio? I don't think so. And so it certainly is. These financial advisors need to get better at what they do. They need to offer other things, right? They need to offer things like collaborative custody, right? Some people want to hold Bitcoin, but they're afraid of doing it on their own. Collaborative custody is a great way for these financial advisors to still earn some kind of fee, but also not losing their jobs to Bitcoin's outperformance. And even I put out a tweet a little while ago. It's like, okay, these anti-Bitcoin financial advisors are going to lose either way. NASDAQ is now MicroStrategy is now in the NASDAQ 100. QQQ is the third largest passive fund in the entire world. So sure, these anti-Bitcoin financial advisors can stop recommending QQQ. But what happens when the FASB rule that just went into effect causes MicroStrategy to have 3 profitable quarters in a row, and then all of a sudden it's included in the S&P 500? Are you going to stop adding the S&P 500 into people's portfolios as well? Like, regardless of what these anti-Bitcoin financial advisors want, Bitcoin's going to make its way into all of their portfolios, whether they like it or not, lest they stop bringing their clients into every single ETF for a stock market index in the United States. And that's not just going to happen. And so over the next 5 years, Bitcoin and Bitcoin adjacent vehicles like treasury companies are going to make their way into every single portfolio in the United States and on the planet, whether countries like it or not, whether regulatory authorities like it or not, and whether these anti-Bitcoin financial advisors like it or not.
Can we go into the have you done the research to talk enough about to be confident to talk about the FASB impact on MicroStrategy's earnings?
Yeah, I know enough about it to be able to chat about it for sure.
Yeah, let's go into that. What do you think is going to be the impact? How is that going to change MicroStrategy's future?
Yeah, so basically, what has happened to this point? MicroStrategy is not allowed to value their Bitcoin at their current market value, or excuse me, they need to report it at their current market value, not the original purchase price. And any changes in value, or excuse me, other way around. So the current rule is that, and again, apologies for mixing this up, but they have to report all of their holdings at the original market price, not the current value. And so any changes in value, right, these gains or losses, do not get shown in their income statements, right? And so essentially all the Bitcoin that MicroStrategy has purchased, all of the huge appreciation, like their average cost basis is like below the 50,000s, if I'm not mistaken. All of that huge appreciation, if they were able to put that on their income statement, if they were able to measure that Bitcoin at fair value, at the current market value, then they wouldn't be able to, then they would be able to have profitable quarters, right? Those quarters that were not profitable for MicroStrategy would be profitable. It would already be based on its size, based on its profitability in the S&P 500. And so now that this accounting rule is going in where companies will be able to report gains and losses on Bitcoin and other crypto, but Bitcoin for all intents and purposes at fair value, which is the current market value, and thus report all the gains on their income statements. That'll come in as profit. That will allow companies like MicroStrategy to be included in the S&P 500. It'll allow basically the outsized profitability, the impact of Bitcoin to be shown in their income statement, which will mean that these Bitcoin treasury companies will be a lot more profitable on paper. And it will allow more Bitcoin treasury companies and more Bitcoin adjacent companies like mining cos to be included in indexes like the S&P 500, which require at least 3 consecutive profitable quarters in order to be included in the index. So that is high level, as far as I know, the FASB change that has gone into effect that will allow MicroStrategy probably this year, right, given that 2025 is shaping up to be a great year for Bitcoin, to be included in the S&P 500.
So this is going to basically make it so that MicroStrategy seems to be more profitable, and
Correct.
it'll bump up its ranking on in the Nasdaq, and it'll make it so that there's more passive flows that go into MicroStrategy, meaning that MicroStrategy can buy more Bitcoin, meaning that Bitcoin's price goes up, meaning that MicroStrategy's market cap goes up even more. It's the flywheel effect.
Correct.
Right?
Yeah. And
And
then
it's even strengthening it.
for other indexes too, right? You know, it'll be included in the S&P 500. It'll be included, in SPY, and then in the other two, apart from the Nasdaq, the other two largest passive funds in the world track the S&P 500, I believe. So that means that the top 3 passive funds in the United States, hundreds of billions of dollars in size, all of them will include MicroStrategy. So every single, on a biweekly basis, weekly basis, monthly basis, billions of dollars will be flowing into these funds and flowing into MicroStrategy based on its weight in the index. And then as people buy the index, but also buy MicroStrategy in its own right for its outperformance, its weighting will increase. It'll be able to buy more Bitcoin. Once the rebalancing happens on a quarterly basis for every single one of these funds, MicroStrategy will be weighted more. That means more money to MicroStrategy, so on and so forth. So yeah, Bitcoin has entered the passive fund market. MicroStrategy was able to break into kind of the fixed income market via its convertible debt, and now it's breaking into the passive fund market. And all bets are off. It is the flywheel effect.
Yeah, this is. I feel like the next years is going to be absolutely nuts. I want to ask you a question that I ask all my guests.
Mm-hmm.
The question is, what do you think is the most important downstream effect of Bitcoin? So let's say 10, 20, 30 years from now, what do you think is going to be the biggest change that Bitcoin makes in how the world works? So for example, actually, you give me your answer first.
Mm-hmm. It's going to change the way that interest rates are calculated. So currently what we have artificially manipulated cost of capital because the Federal Reserve sets its policy interest rates. It sets the rate at which banks would borrow and lend to one another. It sets basically the benchmark rate at which U.S. Treasuries generally trade around. And it basically sets the rate at which everybody across the economy borrows. U.S. Treasuries generally lead the Federal Reserve, but they always revolve around what the Fed's policy rate is. So the 2-year yield is the closest approximation to the 1-year yield, rather, is the closest approximation to federal funds. Everything else, as you go out longer on a normal yield curve, they get a little bit higher, but largely they revolve around what the Fed has set as its Fed funds rate. 10, 20 years from now, that's going to change, right? We now have Bitcoin-backed loans. And Bitcoin basically offers, particularly through the Lightning Network and the rates at which Lightning nodes set, it basically offers a non-centrally manipulated benchmark interest rate. And so the cost of capital, right? Your mortgage rate, for example, or your credit card rate, that will increasingly no longer be set by these central entities like the Federal Reserve, who are unelected bureaucrats who basically with one hand say, I'm going to accurately create this borrowing rate for the entire economy, which is comprised of hundreds of millions of different individuals, each with different credit ratings, each with different borrowing abilities. I'm going to do this top-down thing where I set the benchmark rate for all of them. That's going to be done away with, right? All the distortions that occur as a result of that are going to be done away with. And in its place, we're going to have a much more per case, fair setting of the rate at which people can borrow and lend. And that's going to be fantastic. It's going to mean that people can borrow at much lower rates because Bitcoin will be serving as the collateral, which of course is pristine. If you're a lender, being able to lend against Bitcoin collateral is like heaven. It trades 24/7, every day of the week, every hour of the day. You can call it in at any time. You can ask your debtor to re-up at any time, right? If the value of the collateral reaches a level at which they need to add more, you can ask them to do that at any time. And so for that reason, it's basically like the best collateral in the world if you are a lender. At its current, volatility, it's still a little bit too volatile to serve as a collateral. But as these loans become more prominent, these Bitcoin-backed loans, eventually Bitcoin-backed lending will be one of the primary forms of lending globally. Bitcoin will be much more stable at that point. Bitcoin will probably be close to 100 trillion, if not more, dollars in size at that point, because its properties of absolutely scarce 24/7, 365, highly liquid money make it basically it's been called pristine collateral, and that's exactly what it is. And so as Bitcoin usurps the throne of gold, eventually usurps the throne of US Treasuries, and then the entire global fixed income market, it's really going to set at the base of global credit. And that's basically where it belongs, right? Bitcoin-backed lending. So I believe that is the biggest downstream effect of Bitcoin. It's going to lead to a higher quality of life, more fair borrowing and lending rates. You're not going to see student loans that have 12% interest rates. You're not going to see credit cards that have 25% interest rates. Borrowing is going to be much more fair for the individual. And so it's going to make life a lot more attainable, right? Quality of life much higher. It's going to make life and people's goals a lot more attainable. And then the other thing, I guess, it's like a little second answer, is it's going to improve quality of life. It's going to make people's dreams much more in reach than they were previously. The last video that I did on X, and I also posted it to my YouTube channel, all of them are my name, Joe Consorti, and I'm sure they'll be in the show notes, was about GDP and why the US government prioritizing GDP growth above all else has led to my generation, Gen Z, feeling like they'll never be able to do things like own a home, never be able to do things like start a family. These things that were once dreams of prior generations and perfectly attainable, particularly for generations like the silent generation, particularly boomers, and then Gen X, and then millennials, and Gen Z. With each successive generation, it has become more out of reach because wages have simply not kept up with asset price inflation. The people who own the assets, largely boomers, have benefited the most. And the worst part of all this is that the boomers largely are not giving their money to their children and their grandchildren. They are instead going out on cruises and giving it to companies and going on vacations and buying a third home and doing things like that. And so now Gen Z feels totally destitute. Millennials feel totally destitute. And Bitcoin is a way to save yourself from all of that. It's a way to, in the next 5 years, 10 years, 20 years, 30 years, to make it so that those dreams will become achievable. And then the most beautiful aspect of that as well is not only will your dreams be more in reach, because instead of saving in the S&P 500 and maybe over this 30-year time frame, earning a net $200, $250, $300,000 on that, on whatever you were able to invest over that time. Over the next 30 years, you'll instead be sitting on $2 million, $3 million, $4 million, $5 million with the capital that you invested. So not only will you be able to sell some of your Bitcoin in order to achieve some of those dreams that you'd like to do, but also you'll be able to borrow against your $4 million, $5 million, $6 million stack of Bitcoin. So it will be fantastic for individuals, and it will take that power of setting the borrowing rate for the global economy away from these central authorities who really don't care about us whatsoever. So those are the two, I guess one, but two biggest downstream effects that Bitcoin will have over the next 10 to 20 years.
So I have a little bit of pushback on the second thing that you said there, that you can borrow against your Bitcoin. I actually think at some point we're not going to have dollars. I think Bitcoin's values is going to go up so much that the amount of dollars in the system versus the amount of Satoshis that we have is going to explode to such high numbers that there's going to be no point of valuing things in dollars. So we won't need to borrow against our Bitcoin. What are your thoughts on that?
Yeah, I think that, the world runs on credit today. I think that the dollar is probably going to be around for the next century, if not more. I think global fiat is going to die on the vine, but I think there is a need for credit. But the way that credit currently exists today, with severely under collateralized loans and predatory interest rates, it doesn't work. It works for the bankers, but it does not work for the individual. So I think that one of the transformative aspects of Bitcoin is it will realign global credit with basic human incentives. If you want to borrow, you're going to need more collateral than what you're borrowing. So for example, if you want a $500,000 loan, chances are lenders will say, okay, we need $1 million of collateral. That's not how it works today. So I think that it will fundamentally change the way that credit works, make it less predatory and better on consumers, but also safer for lenders. I believe that the dollar is going to be around for probably the next century, if not more. But that remains to be seen.
Yeah, I mean, I guess I can see it from your perspective, but I feel like it's game theory, right? Like, let's say, for example, in countries around the world where even if people are forced to use the local currency, some people do want to take dollars. So let's say, for example, they have the peso. The peso is going to zero, essentially. The Argentinian peso is going to zero compared to the dollar. If you go to Argentina, if you walk around, you see convenience stores offering exchange services because they don't want the peso. They're trying to give away their pesos as quickly as they possibly can. They want as many dollars so that they can give away their pesos, right? I think at some point that's going to be the case. I think people aren't going to want dollars. Maybe that's just too abstract. Maybe that's way too far into the future. But I think at some point that's going to happen. I think merchants have no reason to accept dollars if they have the option to accept Bitcoin, right? But that'll take some time. I agree with you. It'll take some time. I don't think it'll take 100 years though. I think it'll probably take. I think it could happen in 10 years. Right. I don't know if that sounds crazy, but I think it could happen in 10 years.
I think that for it to happen in 10 years, you would need some kind of insane geopolitical event, something that would probably be terrible for the world in order for the timetable to be within 10 years. That's an interesting perspective. I'll offer another one for the viewers. And that's why these podcasts are so great, because viewers can get different perspectives and learn how to think about these things. I think that the dominance of the dollar is actually good for Bitcoin. It's great for Bitcoin because the US has the most free and open markets globally. Obviously, you have other countries like El Salvador who are, increasingly great for businesses. These other people who are trying to make it so that they attract businesses. But from a capital control standpoint and from a personal freedom standpoint, like if we put those two things on like an axis, there really isn't any better country that is the best balance of the two of those things than the United States. And so I believe that, just like you said, you go to other countries, they don't want the peso, they want dollars. That's a great thing for Bitcoin because of the country that the United States is in. And that's why I'm so happy about Donald Trump being elected our 47th president here in the US, because he is already committed not just to making the US economy more open and attractive to global investors, global capital investors, but he's also promising to make it more attractive for Bitcoin, the asset, and Bitcoin companies specifically. And so those two things in tandem with one another, right? Another 4 years, potentially 8 years after that, if JD Vance is elected, which I believe he probably will be if he runs, then we stand to see the best decade plus for the US dollar, but at the same time, the best decade plus for Bitcoin. Because of the prospect of things like a strategic Bitcoin reserve, because of the prospect of the best regulatory environment for Bitcoin companies. Even though the dollar, is dirty fiat, it is the king of fiat. And so I believe that it will continue to be the king of fiat. China cannot outcompete us. They do not have free markets, right? As much as they claim to be free markets, they simply are not. Russia does not have the ability to outcompete us. The United States, and I've said this for a very long time, we kind of lucked out in 1944, I believe, or 1946, whenever the Bretton Woods Agreement was, 44 or 46, I can't quite remember.
44, yeah.
We lucked out because all of the last 80 plus years, 80 years, and I believe like 3 or 4 months of U.S. economic or a global economic creation, right? The modern global economy basically has entirely been built post-World War II. The post-World War II global economic construction has existed with the United States dollar as like the foundation underneath this 1,000-story skyscraper that has been constructed on top of it. And so we really lucked out, right? The United States lucked out. Everybody wants dollars. And so I believe that trend is going to continue as the U.S. economy continues to outperform others. It is the best capital controls, the most free and open markets, the most individual freedoms, which are going to increasingly matter over the next several decades. The dollar, people are going to continue to want dollars, but at the same time, the realities of the U.S. fiscal situation, with like a 7.5% deficit as a percentage of GDP, a 130% debt to 120% debt to GDP ratio, we're going to need to issue more debt. The marginal buyer of that debt will increasingly, it'll be the globe, but increasingly the US Fed will continue buying more of that debt during times of crisis, which means new money gets printed, which means that even though the US will be king of fiat, everybody will want the US dollar. People are going to want Bitcoin as well, right? Especially here in the US. And so that's why I believe these two things are, even though the dollar is dirty fiat, it's the king of fiat. The strength and dominance of the US dollar is actually great for Bitcoin. And so I think these two things are going to grow and prosper in tandem until the US dollar kind of usurps the entire US Treasury market and then the global fixed income market as the single largest asset in the world, at which point the US dollar will have much less of a use because the US Treasuries aren't the world's preferred collateral anymore. It will be Bitcoin. So that's why I think the two things are actually good for one another. The dollar and Bitcoin are not enemies, but they're mutually beneficial toward one another over the next several decades as Bitcoin monetizes.
Makes sense. I think that's a good explanation of your thoughts on that. I want to just end off with this was a great conversation, by the way. I want to ask you, what do you think the chances are of Donald Trump actually setting up a strategic Bitcoin reserve?
I think when he first announced this, I would say that the odds are much lower. That he was just kind of opining for votes, saying whatever he needed to say in order to get into office. But I think with both of his sons, particularly Eric, being extremely enthusiastic about Bitcoin, paired with the prospect of Russia establishing a strategic Bitcoin reserve, which is not just a rumor now, it's being heavily floated within their finance ministry. You take a very competitive guy like Donald Trump and you whisper in his ear, hey, Russia's doing this thing before you. Then all of a sudden his competitive nature kicks in and he says, no, I'm going to buy all the Bitcoin before they can. So I think that the prospect of it has shifted from like a 50-50 coin toss to something that's more than probably 70 toward 80% likely to happen. And it doesn't, the Bitcoin Act of 2024 put forward by Senator Cynthia Lummis, and actually I was the first one to interview her on that over the Bitcoin at the Bitcoin Layer YouTube channel. As soon as the bill went live, she gave it to us in advance. As soon as the bill went live, she hopped on our show and we uploaded it. It's a great bill. If you haven't read it, the viewers, I would highly advise that you read it. Basically, the idea is we buy 1 million Bitcoin over the next 5 years. We hold every single Bitcoin that we buy for a minimum of 20 years, right? When we buy any, stock of Bitcoin, we hold that stock for 20 years. And then it's determined at the end of that 20-year period whether we continue holding it or sell it. We don't even have to pass that to establish a strategic Bitcoin reserve. And I'll explain. The US holds about 198 to 212,000 Bitcoin. It's not entirely sure how much, but somewhere within that region, right around 200K. So we already own close to 1% of Bitcoin's terminal supply. If Trump were to get in on day one and just sign an executive order that says all Bitcoin held by the United States, the 200,000 some odd Bitcoin currently held by the United States will be demarcated. It will be categorized, named the U.S. Strategic Bitcoin Reserve. Done. That's all it takes, is that one executive order basically reclassifying the Bitcoin the U.S. already holds as their strategic Bitcoin reserve, and then basically saying, we're not going to sell what we own. We're not going to sell what we have. We already have almost 1% of the supply, and we are going to name it the strategic Bitcoin reserve. That's all it takes.
That's it, yeah.
And then what you will see as a result of that is other countries saying, oh my goodness, the US holds 1% of the Bitcoin supply. I got to start buying up some of my own, creating my own stockpile. Because when the United States, when the world superpower basically assigns this asset, Bitcoin, immense geopolitical importance by having a strategic reserve for it, all of a sudden other countries want to follow suit. And so that game theory that you spoke to earlier, that's now playing out on the nation state level. And so that's really all it takes, is the stroke of a pen to recategorize our existing 200,000 Bitcoin, almost 1% of the terminal Bitcoin supply, as the SPR, and then it's off to the races. And then if Russia were to establish one and start actively accumulating, either discreetly or explicitly, then you can bet that the House will move to put forward the Bitcoin Act of 2024, right, which is purchasing 1 million Bitcoins over the next 5 years, holding all of it for 20 years. So that's really all it takes, right? The rumblings are already there. Trump is already very, very much bullish on this thing. We just need enough people in his ear saying, hey, look, Russia is floating the idea of doing this. And then all of a sudden on day one, you get this executive order. So long-winded way of answering it, but that's, I believe, the path of least resistance to making this thing happen. And I do believe with a pretty high degree of confidence that it will happen within the next year.
Yeah, and he's pretty competitive, so I think he would want to be ahead of all these other countries. I feel like the downside of him saying no is that maybe right now they want to buy 1 million Bitcoin at some point, but if they say no and they keep delaying and they keep waiting, they may never reach 1 million Bitcoin.
Mm-hmm. Yeah.
Perfect. That was a great conversation. Hey, Joe, I want to actually have you mention yourself. You can plug yourself. Where can people find you here?
Absolutely. Well, thanks so much for having me on. This is fantastic. I always love, like I mentioned in the middle of the show, I always love when two different perspectives get offered during a podcast. So again, thank you so much for having me on. You could find me on X. It's where I post most of my stuff, at Joe Consorti. It'll be linked in the show notes, just the exact same way that you see it up on screen and probably in the title and the thumbnail as well. And I also have a YouTube channel, Joe Consorti. I could use some more subscribers over there. If you'd like to search me up, go ahead and subscribe. All the same type of content that I just spoke about today. It was pretty all encompassing. I basically Bitcoin and geopolitical, global macro analysis and insights. And if you also want to check out my company, it's called Theia. Spelled the exact same way that you see behind me on the big glowing sign, THEYA. It's basically the world's simplest Bitcoin multi-sig solution, world's simplest Bitcoin self-custody solution. So if you have Bitcoin on an exchange, we see what happens during bull markets, what happened during 2022. FTX, everyone's trying to get their hands on it. Not even to mention if you have a hardware wallet and you lose it, you lose your Bitcoin forever. Check out Theia. It's a very, very easy way to take your Bitcoin off of exchanges into your own hands with no technical experience required. We've been live for about a year now, and we've experienced insane user growth, which is a vote of confidence that the app is what it says it is. It's also available on web. If you go to app.theia.us, you can check it out there, see what you think.
Amazing. Thank you so much for your time, Joe. Really, really appreciate it.
Thanks a lot.